welcome to The Trade. Before we get into the charts that matter, let's have a look at what investors are watching, with Ukraine using US long-range missiles to strike Russian territory overnight, taking advantage of newly granted permission from the outgoing administration of US President Biden on the war's 1,000th day. Oil prices settling higher as tensions mount between Russia and the US over Ukraine, while gold hit a one-week high. Canada's annual inflation rate rose more than expected to 2% in October, causing markets to scale back bets on a big rate cut next month. And the Bank of England is expected to cut rates gradually as we start to brace for the Trump tariffs and the inflationary pressures they're expected to bring. Let's get some technical analysis now from Chris Weston from Pepperstone joining us. Chris, let's start with gold because, of course, it has been this safe haven move amid concern about what's happening in Russia, Ukraine, but we have come back from those 2,700 levels.
Yeah, I mean, it's we bounced off the 100-day moving average, and I'm sure if you've got a chart right in front of you now, but yeah, we certainly after a 9% pullback from I think 2,800 was the absolute high that we got recently. Yeah, we saw a 9.1% pullback in the drawdown, which the biggest drawdown we've had of the year. I think the last one was about 12% back in October, but it bounced off the 100-day moving average, and I think it sort of coincided with we've seen 2 days of higher highs coming through, and I think what we've seen a bit of heat coming out of the US dollar. The US dollar index has pulled back a little bit. It looks like it may sort of gravitate a little bit lower, even though we still quite like the fundamentals on the US dollar at the moment. And we've also seen a little bit of heat coming out of the real rate story as well. So we'd seen US 10-year real rates moving up to about 210 to 212 or so, and then it's just a bit heat's coming out there, and I think that's just allowed the gold price to move up. So the question is can this kick? Or I think we've put in a short-term low. It seems that's pretty likely. The question is are we going to see consolidation and a bit of a range moving sideways, or does this sort of gravitate to sort of the 50% retracement level of that 9% pullback that we've been seeing? I mean, some people have said that the news flow we've been seeing about Ukraine, Russia, and some modest concerns around US potentially getting involved a bit more is a reason to own gold. I see this as probably more noise at the moment. Obviously, I'm not a geopolitical analyst or a military strategist or anything like that, but I think the market is probably the fact that we didn't see too much of a move up in crude, and the Swiss franc really didn't do too much overnight. I think the market's saying that they're pretty conditioned that this story is more of a noise rather than a true signal. But I think the fact is we've seen gold bounce off the 100-day, and I felt that's probably more coincided with a bit of heat coming out of the US dollar more than anything else. So tell me where the US dollar is going to go in the short term, and I'll probably tell you where gold's going to go. But I think we've definitely, it feels pretty clear that we've made a short-term low at the moment.
Well, where we are seeing continued momentum is Bitcoin. I think back to 2 weeks ago when we were just still finding out who was going to win the US election, I was getting all these emails, Bitcoin's going to get to 80,000. We're at 94,000, Chris. I mean, just tell us about this continued momentum.
Yeah, I mean, I think the chart tells you everything. I don't know if you've got the chart up now, but I mean, this is one that is an absolute momentum beast. And what I like about this at the moment is that we have seen consolidation. We saw a really strong 40% move up. It was impulsive. It was one way. The sellers pulled out. The order book on the sell side was very, very thin across the exchanges, and that allowed the buyers to push price up a lot more readily. Obviously, the news flow has been pretty positive, and that's allowed people to come in. We're talking about potential change of regulatory environment under Gary Gensler at the SEC. He had a very, very tight regime. And there's different talks of a very crypto-friendly person coming in at the helm. That doesn't mean that they're going to suddenly open the floodgates and allow the party to get out of control. But I think certainly a more favourable regulatory regime for the crypto movement is a positive. Obviously, you're talking about a new US Treasury Secretary coming in. Talking therefore, the names that have been touted as sort of pro sort of a US sovereign crypto coming through as well. And I think you've just seen this momentum, and Bitcoin just feeds off off positive sentiment like all markets. So technically we've come up into that 92,000. We pushed up to 94. It pulled back a little bit, and we're just consolidating, catching our breath before we potentially take another leg up. So I think the best way to trade this is momentum favours the bold in this one. Buy strength. If this can kick this time, I think it goes high. But I guess the new news here is that we've been focused so heavily on the inflows into the various Bitcoin ETFs. And there has been a positive relationship between the level of inflows and the returns you've seen in Bitcoin. And that still continues to be very upbeat. We're still seeing big inflows. Everyone's looking at the IBIT, which is the iShares ETF, but they've just released options as now, and that came live last night. So, what we're going to see now, and we saw it last night with massive call buying. I think there was 289,000 calls traded on the IBIT relative to 64,000 puts. So what's that? A ratio of 4.4 times for the upside structures. Now, once that accrues gamma, essentially what will happen is the dealers will be short gamma, which in layman's terms, what that means is as the price goes higher and into the various strikes that have been put down, the dealers will have to come and buy the underlying, either the Bitcoins or go out and buy the IBIT ETFs, which then just propels the price up. So I think the fact that they've released the options on this is going to be a very big positive as well. It may reduce volatility, but what that means is, as the price goes up, you're going to see the options market play a big part in the Bitcoin price as well, like it does in the equity market. Options dealers are huge buyers in that. So I think that's a big factor there. So 100,000, here we come.
Yeah, okay. Let's have a look about options, because Nvidia's options prime for a $300 billion price swing. This is the big one we've been waiting for.
Yeah, I mean, when we talk about the options market, the role that the options market plays in Nvidia, you can't be understating it. It's people try and explain a move, but so much of this is driven by passive flows and hedging flows taking place. If I look down at the options chain now for Nvidia, for expiries the day after tomorrow's earnings, so the 22nd of November, there's massive exposure around the 150 strikes. So it's closing at 147. There's one massive exposure around 150, 155 strikes. So what that means is we get some good earnings, and the market is expecting about an 8% move in the share price after market, up or down. Volatility is agnostic in direction, but if we get an 8% move, what happens then is all these options that have been dealers have sold and the street have bought, effectively the price goes up, they have to hedge, they buy Nvidia stock, and it just perpetuates the move up. So we can't understate just how important the role of the options player is these days. I think the interesting, if you look at the move overnight, we've just seen a 5% move in Nvidia going into earnings. So I think it tells you, one, that options have played a part, but obviously the street is running a pretty long position into Nvidia's earnings, and they're pretty happy about and comfortable holding into earnings, which is a big concern. You don't really want to be caught too long if they come out and disappoint the market. But I think the interesting thing here is about the guidance for the next quarter, for Q4. The sell side have got a view that they're going to sort of guide to about $37-38 billion of sales. I think the buy side, the hedge funds, the pension funds, are probably more towards 40 billion. So they need to probably come out and guide towards 40 billion to please the market. So I think it's going to be an interesting one. Obviously, then Jensen Huang steps up just afterwards, and he's a rock star in terms of being able to please the market and telling them exactly what they want to hear about GPUs, the rollout of Blackwell, how Hopper's going, and all these factors and the demand coming through. He will tell us exactly what the bulls want to hear. But look, volatility is assured. I mean, everyone's expecting an 8-9% move in the share price, which for a 3.6 trillion market cap company is absolutely insane. But I think it's a big trading stock, and the options market is such a big player in driving direction.
All right, Chris, thank you as always. Chris Weston from Pepperstone. That does it for this edition of The Trade. Be sure to join us again next time.